Hey man, how's it going?
We
Yeah,
made
it's like nothing's changed. You guys are still here. You never left the room.
Same old us, man.
yeah, we stay
Yeah,
here.
that's right. That's exactly right. I know what we're missing,
I've got a
dude.
little lunchbox under
You
here and a
ready?
fishing pole.
Ready to go?
Boo!
There you go.
How do I
Yeah.
get? That's nice.
How's it going, man? It's good to see you again.
Yeah, I was listening back to last year and it's been almost exactly a year and you said we want you back in a year to see how things are going. So
One, a heck
uh
of a lot has changed in that whole space, man. I mean, I feel like the narrative's gone up, down, left, right, all over the place, and probably more questions than answers after all of it today. So excited to chat about it, man, and see what's been going on.
yeah, absolutely.
One thing's
You
for
want to kick
damn
it off?
sure. Everything that you talked about, everything we were all talking and expecting to happen has happened.
Mm-hmm.
So that's kind of a positive,
Mm-hmm.
right?
But
There's so much. I had a conversation with an old banker buddy this morning, and we were just talking about the Tanner has a really cool timeline that you go through on the technology changes, and this timeline just gets shorter and shorter every
yeah,
time,
Impressed.
impacting it's
yeah.
like bam, bam, bam. So it's like a tidal wave of things that are happening that, I've said it a long time ago when they let the cat out of the bag and my dog started becoming a fintech with a debit card,
Yep.
that the game was on, man. And, the bankers being able to extend these services out to merchants and to fintechs and all that, the whole BaaS program
Mm-hmm.
idea has just changed the world all over the world.
You bet.
Yeah, to be honest with you, going into this conversation, I was last night, picked up my 6-year-old from baseball, got home. I'm a Seahawks fan, so I turned on Monday Night Football, and the very first commercial I see is Experian announcing their new debit card product, and all you got to do is switch your deposits to Experian, and you'll get a boost in your credit score. And I
Back
was
to
like, man, the timing of this couldn't be more interesting, right? Because would love to talk to you guys about Affirm and what they're doing with their debit card product and some of the other BNPL providers, but BNPL, I always want to go back and say it's death by a thousand cuts. We can look at all these third parties that are eating away at the community financial institutions deposit relationships, be it the Coinbases of the world or the Acorns and Stash and Robinhood, and then now you got BNPL. Well, now it's also the bureaus. Like,
Right. Well, and
it,
I mean, here in Texas, our grocery store, the love of Texas, HEB, right?
Yeah.
And HEB is now offering a damn checking account, savings account, and a debit card with 5% cash back. How do you
well,
compete? How am I supposed to compete with HEB
check
and
this out. He,
Experian?
he got a great point, man. When the credit bureaus are like, hey, you want to get a cut of the action too, right? It's like, man, coming
It,
at me from all directions
it's
here.
game on. The times of Bryce, I was talking about this the other day of let's just say the challengers, right? Was that 5, 8 years ago, right? Challengers. And I think in the last 3 or 4 years, the question has been either partner with them, if you can't beat them, join them, aka sponsor them, or fight it out with them. And it feels like every day that goes by, there's more and more like the app was it 10 billion in deposits went to Apple, right? There's another story every week, and more of this. And it's, I think from bankers, we're damn sure hearing I know I decided to compete with them, but is it too late to partner? Right? Can I still sponsor them? There's a big wave of that going on.
That's funny, man, because years ago everybody was like fintech was the F word, man.
Right,
And
right. Now
now
it's an
it's like,
opportunity.
yeah, it's like, I mean, I remember a year ago talking to this guy, and it was funny because I was telling him that it's kind of like being in the banking business going, man, we're doing these loans and stuff. I don't know if I really want to get into that. And it's like, you're going to get into this.
You got it.
well, I have a different outlook on the direct to consumer fintechs and the partner versus compete than probably most. I think it's the Trojan horse to kill the community FI personally. I grew up in a small town. It was a credit union, a local bank. Like that's where
Mhm.
Where was your small town?
Lewiston, Idaho. I was born on an island in the Puget Sound. Then my dad, who was a preacher, moved us to another small town because, you know, we got a church plant all throughout the Northwest. And yeah, so growing up in like the Lewiston area, you know, going to the local high school, you had the branch inside of the high school. So then you can work there if you're like a DECA student or a 4-H student, and you could get some credits to learn how to count money. And, you know, so I don't see like the Robin Hoods ever doing that in the small town America, right? That's really the community FI who can do that. And then like and this is a long, like, I'll get there. I promise.
No, go. I love it.
You know, so like my generation, like upper 30s, we were really the last generation that, okay, you went out and got your job and then you banked, like you pointed at the nearest corner. Okay, I'm going to bank there. And then the iPhone came out, changed the world. And then it was like, okay, well, which app is the easiest to use? So then banks were like, well, crap, we need to get a nice app, right? So then they went and partnered with these infrastructure players like the Alchemies and Q2s of the world that built nice technology for them. And then it was, well, but now these direct-to-consumer fintechs started spinning up products that we literally can't build. Like they spent hundreds of millions of dollars in R&D to build these things. Okay, so how do we compete with them, or well, let's just become a BaaS. Let's become a banking as a service provider. Well, that worked really, really well in the 2008 to 2012 world, where those challengers were becoming the brands that they are today. And then now 10 years later, you got probably 1,000 banks that are pointing back at like 5 banks and saying, well, it worked for them 10 years ago. So we should become banking as a service providers too. And we should build out teams. Let's go hire like a bunch of people from that bank. So we can do this too. And it's becoming more and more scattered, more fractured. And what they don't realize is the direct to consumer fintechs, typically only like 2 to 3 of these companies actually win in the end. It's not like there's 4,000 community banks out there. There's not going to be 4,000 direct to consumer fintechs that last a decade from now. So that's also it's a short-term game. But you mentioned Apple. There will be some big winners. Like PayPal is obviously one of them. They survived that 2008 to 2012 area. Stripe is another one of them. You could look at Uber. Uber is one of them, right? They have debit cards issued for tens of thousands of drivers. Coinbase is probably going to still be around, I would assume. But these banks and service providers are partnering with like random websites that issue loans that then say, oh, well, we should probably also issue a debit card and try to cross-sell that so we can make some interchange. Well, if you're the bank under the hood, like you're actually participating in the demise of the corner institution. So I will bleed for the rest of my life for the community FI. And I think that they're doing a disservice by not building the right app and the right products and partnering with the right fintech so they can actually offer those products to their community versus being part of I would just say like the great deposit transfer.
Yep. So this is super interesting. Can I take this one? I love this. Okay. So I talk about, let's call it 2008 and Cross River, right? It's like up until that moment, even if that was very much the beginning, you could say you've got the community banks on one side and the website, internet, fintechy people on the other. What do we want to call them? Okay. Until the first one gets sponsored by the first bank. And we're embedding chartered financial products outside of a bank for the first time. All right. To me, it's like that was the first domino to go. The cat's out of the bag, whatever analogy or metaphor you want to use. And now to your point, it's like, well, here comes Experian and HEB and Home Depot. And I think there has been a horrible mistake in all of our vocabulary that's going on. And it's taken the bulk of the BaaS banks today, not all, but the large portion. They see these fintechs as the opportunity for BaaS and embedded finance, which I think to your point, they're more or less mostly challengers or challenger-ish, right? Where I see the opportunity, I don't really give a damn about that market. I said it. I don't see Chime doing much. to be frank, with their $54 account balance or average account balance. Point being, Home Depot scares me. HEB scares me. The car dealership scares me. They don't need to make money on financial services. The grocery store is trying to sell groceries, man. Right. And so they can give
competitive tool.
Exactly. And it's all about loyalty, rewards, stickiness. They're doing an app. Cool. You've also got the point of sale opportunities, closed loop, right? So they can just give back interchange rather than pay it as the merchant. It's really interesting. Okay. So to me, this is the evolution of, let's call it commercial or small business banking, right? And in community banks, we live and we die on small business. And we can argue the sizes. Let's call it about that 50 employee SMB line. If I'm a plumbing company, electric company, air conditioning, HVAC company, 50-ish employees, I would love to offer, a loyalty account with a savings, a checking, I'll give you a debit card, whatever it might be, right? I don't know the profile yet of what all of those successful challenger-ish things look like, but they used to look like our customers, right? And now, is HEB a competitor to the bank? Is Home Depot a competitor?
Starbucks?
Right? You see this, I've given a number of recent presentations on this, and they're big rooms of people. You've been in some of these. I got 100 people in the room, and I'm not trying to answer this question because I think I could probably argue it either way. But if you looked at Chime and you look at a HEB or an Experian, the offer and the products damn near the same thing, right? Checking account, savings account, debit card, cool. Is Chime a competitor or a potential customer? And is HEB and Home Depot a competitor or a potential customer?
I think it depends on what are you
like,
trying to build, right? Like what's the mission and values of your bank?
Ding, ding, everybody stop.
Like, are you trying? Yeah. Are you trying to be the bank for your community, or are you trying to make money? And those don't have to be separate things.
Sure. Well, here's the rule: is you can do both.
Well, you can do both if it's your mission and value to serve your community, because serving your community, you can also slice that in a bunch of different ways. Like, does that just mean like you're a great place to work? Because that can serve your community, right? And you can do some not-for-profit stuff and giving back. But if you're a BaaS provider for a grocery chain, and you don't really service like local checking accounts and savings accounts,
it's not the hometown grocery store.
Like, your mission and statement of values are way different than somebody who is building out a network in the local communities and doing some CDFI work and actually wanting to give back to the local community, and that's where they bank.
Can I chime in here? Good. Okay, so man, I love you guys. This is so cool. You're literally right there, and it's like when I said you can do both. So I want to be the bank that serves the hell out of my local community. I want to get new football, helmets for the team or whatever are needed in my community, help the orphans or whatever it may be. And I want these things to be primary of our existence. Now, we all know that a bank has to make some level of money. And the way to do this, I think, is really cool, is I can embed my financial services that I have by virtue of my charter into merchants. They don't even have to be local merchants. They could be an HEB and I could be in Arkansas.
They're referral partners.
Right? Well, they're distribution models, what they are.
Yeah.
I'm going to get them to get their customers to open accounts at my bank. I'm going to take those deposits and get paid for them, especially when I get those cards out. And then I'm going to lend that out to my local community.
Let me add one thing, and then I don't hear you say, Bryce. My fear is, let's just say cost of technology, like DP expense on the bank side, marching up over the last 30 years, right? And you'd have to say the competitive advantage is probably weakest in technology and marketing at a bank. Probably worse today, more outmatched than ever before. Okay. And so I think it's that key equation of how do we keep ourselves in a good position in the local community, but still make enough to get by. And I think largely maybe we have to do some things on the edges, right? I'm not saying just the edges of the community geographically, but things that are a little different than we've always done before. And so this concept of, I like distribution partners, referral partners, right? Being able to ship financial products outside of just the bank itself. It's an interesting way to drive additional deposits, revenues, etc. And somebody else is going to do it if we don't do it. So I think it's what I'm getting at, Bryce, is from my standpoint, this is a big opportunity. And I think to your point, maybe a bit of a greedy opportunity. Hey, I'm all about it. Like these guys are making a ton of money, these BaaS banks, but I think it's shifting into something that looks a lot more like a necessity as well as defense, because I think I'll give you a great stat. This is scary. Now, this isn't why I'm a big proponent. I'm actually worried about the proliferation of BaaS banks, embedded finance, all these fintechs and all these products, because these BaaS banks have now gotten so good. I've seen, and you've seen in the numbers in the last couple of months, we started really watching this. They're stealing commercial accounts from other banks now. If you looked at let's say what you want to call it, the top 1,000 merchants, I bet we've seen 7 get picked off in the last 90 days from banks who don't offer the ability to embed.
Okay, so if I can embed my services into a merchant.
See, it just got weird, right?
Makes me think if I'm running this bank, I'm still serving my community like crazy. And now that I'm embedding my services in merchants maybe far away, what's to keep me from doing that all over the country?
So let me use yours real quick, Bryce. What if the local community bank was servicing the local church, and the pastor shows up one day and says, man, we'd love to be able to give a checking account, a savings account, cards to our membership, right? We'd even love to do some interesting things.
Heavenly rewards.
Yeah, there you go, right? But think about all the things like kind of like GoFundMe style. Yeah. GoFundMe style things that the church is always involved in.
Right.
Very financial services oriented, trying to raise money for somebody who's sick or whatever. Okay, if the local bank can't offer the church the ability for a checking, savings, debit card, whatever, prepaid, whatever they're looking for, and a bank from out of town could, do they win? So that I think is our key equation.
I got a great question for you.
I just asked my question to him.
This is almost the same thing here. I don't even know what point of sale means anymore. And when we start talking about like buy now, pay later,
I just call it point of need.
Yeah,
Good call.
Right, there we go. And where is that? Is it actually at the checkout stand or is it at my home? I don't know.
Yeah.
The answer is yes.
I love it.
The answer is digital first. One of the I'm a big product guy, and all the books I tend to read, there's typically one thing I take away, and it's just removing friction. Like if you're able to remove friction in people or businesses' lives, that's how you actually win, especially with the next generation, because they grew up thinking like friction's a nasty word. Like, what do you mean I have to wait for something, right? They want instant gratification. I want instant gratification. I'm almost 40. So going back to like the church analogy, right? Like, well, if the local bank offers it to me, but somebody else offers me the same thing, but I can like just click the button from my iPhone when I'm sitting at home doing research on it, I'm probably more likely to do it from the button. Now, granted, if I'm like golfing buddies with my banker,
bingo,
then I'm probably going to do it through him.
Relationship making, it's still very real, and it should be.
So I want you to do me a favor real quick and just kind of walk me through some of the different things that you guys do. I mean, acquiring, issuing, setting up, buy now, pay later, all of the different things, and doing that for the bank.
Yeah, I mean, you mentioned HEB. We write HEB installment plans every single day. We have a couple of institutions throughout Texas, and consumers who bank there are using their bank issued debit card, going out and buying their groceries. Then they get notifications through digital banking saying, hey, we noticed you spent $300 at HEB. Would you like to split that out into 4 payments or 6 payments or 12 payments? And then 27 seconds later, it turns into a loan. And it puts the money back in that consumer's checking account that was already issued by the bank where they bank. And then now it just auto drafts out of their checking account, and they can manage that through our digital banking integration.
So with HEB's new debit card and checking account and savings account, could HEB do that? Not today, right? To your point. So I dig where you're heading, right?
Call
That was,
Bryce.
Yeah.
that was really good point. Really, really good point.
Yeah, and we book Carnival cruises down in Galveston, right? Like there's lots of fun. So yeah, let me give you a snapshot because I did that a year ago. We doubled in the last 12 months. I think when I was on your show, I had just got accepted into the FIS Accelerator program. We ended up winning Banker's Best in Show award through that program, which was awesome.
High five.
And then 3 months later, we won the Best Credit Union Product Award at the CUNA's GAC conference. Fast forward to today, I mentioned we doubled. So we're at 30 plus financial institutions now in 2 years, which is great.
Yeah.
And now I have a lot of like live usage data through the platform. So if I was to boil it down really, really simply, we basically are extending the ability for consumers to split out payments over time on the debit cards their financial institution, where they call home, provided them already. So when an institution signs up for our service, it automatically rolls out to all of their existing checking account products. So consumers don't have to apply for this. It's just as if a bank send me a notice like, hey, you can now check your credit score, right? I don't have to apply for that. It's just like a new value add inside of digital banking. If the bank partners with a company that does that, we're the first company that does that for split payments over time. So we have a couple of institutions that are using this as a deposit acquisition tool. So they're marketing in their local market saying, hey, if you set up a checking account here and activate your debit card, you'll get BNPL for free. We have others that are just simply rolling it out to all their deposit relationships and saying, just use our card for any of your travel, health, or auto or retail, and then you'll get buy now, pay later offers. And then we have some others that are using this to effectively eliminate overdraft fees. So now they're just kicking out offers to extend credit
that.
on top of their checking accounts, to where now they can earn some interest income to allow the consumers to self-select how they want to cash flow in their checking accounts.
Awesome.
And that is replacing the NSF income that they were earning prior. So there's a lot of different use cases. We're an infrastructure player, and we just connect to their core and allow them to build out however they want to build out the program.
You know what? Somebody
so
just said,
good. Yeah.
so I'm fixing to go. I have to do these things for a living. Okay. I'm forced to go on this fishing trip and check out the badass trout and see if this is good enough to bring some of these banker guys.
It's a scouting trip.
Yeah, it's a scouting trip, right? Yeah. And when you were saying that, I mean, not to sound like a smart ass, but I don't need to worry about money on a business trip or vacation or any of that stuff. Kind of past that part of life.
Because you just spent all my money. Yeah.
But when you said that, it made me think about, I would use that today, when me and Lisa take off to go on this fishing deal. We're going to drive for 2 days, and I would use that feature just to keep any reserved cash or whatever I needed in my account for whatever moment, or hey, maybe we find a cool bear carved out of a wooden tree or something on the way that she wants to buy. Cool. I could do that, and I still haven't interrupted any of my travel plans or my cash at hand.
The other thing is big purchases, man. I mean, you think about things that,
not to mention emergencies for families that really need that.
Sure. Well, maybe somebody takes larger purchases and puts them on a credit card that's not from the bank when they're usually a debit user. You see a lot of that, right? 6 or 8 credit card transactions a year, and they're all $1,500, to your point, being able to split that up. That's a ton of interchange. I think something that Bryce is really like just solidified for me. It's where I think community banks have to win. Your thesis there of what I felt it from my small town, the same way you talked about of the community. It's a much more interconnected word if you've lived it, right? And you see how the bank fits into it. I don't think that our banks are doing a very good job of seeing how interconnected all of their offers and products are. which is why the challengers are able to part them out, right?
I'm pissed.
What I mean, too.
I'm sitting here thinking
But
about
what-
this. I'm mad my bank doesn't do that to me.
Yeah, well, what you just pointed out was how you take one of those things that could be a very basic and copyable, like a debit card. It's just a friggin' debit card, right? And you took it and added something that
Super valuable.
makes it systemic to other parts and pieces of the organization that, sorry, shut up.
We're kind of
It's pretty
wild
good,
out
man.
here on
Way to
this,
go.
man. It's like, okay,
Yeah.
wait a minute, I can do this with my
So
Really cool,
my
really cool.
my favorite stat we have so far is institutions, even if they don't market it, right? They just launch the button in digital banking. 10% of their checking accounts are going to use it.
That's a huge number.
So you think about, okay, well, what other products have they launched that becomes a reality? It's like, well, Zelle.
Yeah.
Well, yeah,
So we used to see,
that's actually a cost.
in-
You're like,
Full stop.
yeah, in digital banking, I mean, back in the, years ago in mobile, you maybe see 25% adoption of mobile deposit.
Yeah.
Right? I mean, that's
Yeah.
to get to 10% is nuts. There's maybe 3 or 4 features that ever get there,
you're on to something.
you know?
Yeah, and we're still in the early innings, obviously. Like we're in we just wrapped up year 2. The first 2 years was really, really focused on like the regulatory, the compliance, building out the core integrations, getting that certified, building out all the digital banking integrations, getting the case studies and user session stories, and fine tweaking where the button should live and how to send a push notification through somebody else's rails, all the fun stuff that us embedded fintechs have to deal with. But now that we're here and we're like, I've seen the dust settle, we're doing our planning for next year and seeing like HEB was an example that you guys mentioned, but 18% of all of our volume today is travel related. So you mentioned, well, those consumers used to pull out their card. Well, I would use my Discover card for my 3 trips, but then I would use my bank debit card for my day to day. And we're actually seeing that we're able to pull that spend back into the 4 walls of the institution. So our vision, like this is product 1, but really our vision is to bridge the gap between shopping and banking.
Love it.
And you can call it buy now, pay later. You can call it a Crebit Card. I don't really care what you call it.
Is that what you said? A Crebit card.
Yeah, patent pending. No.
Okay, I love this guy. This is so good.
But really what we're trying to do is meet the consumer at the point of need, and small business too eventually, but meet the consumer at the point of need. So if I'm at Expedia.com today, I have to, I want to take my family to Croatia. It's going to be, we want to fly out this date to this date, stay at this type of hotel. Oh, it's $3,600. Okay, well, I don't have $3,600 today, or maybe I do, but I haven't like told my wife I'm booking this yet, so I'm not going to like slap my card down yet. Well, what if you could just click a button inside of digital banking and book that, and then pay $200 a month, and then you go on your trip? So
let me check this. You would actually do the purchase with your debit card, and then it would turn it into a buy now, pay later over time and actually draft that from the account.
So that's what we do today. But I'm saying, what if you just booked your trip inside of your digital banking app, and then you get a kickback from Expedia? So you're still the brand for the consumer. You're still the card for the consumer. You still get the value of partnering with the merchant network, and the consumer just does it through you, right? So this is the polar opposite of the BaaS approach.
It really is.
Which is okay, let's just let Expedia be the brand, and then maybe they want to issue loans or they want to issue cards. Well, what if you just did that inside of your own 4 walls? So, and I'm not poo-pooing on the BaaS structure. I get it. There's a lot of opportunity there. But for the thousands of institutions that still want to be the brand, those are the ones that we're partnering with to bake this experience inside of their 4 walls for people who call them home for banking.
I think you just went full circle there. So it's something we've seen a lot from BaaS banks with partners that get pulled down a path, a specialty path, let's say.
Yeah.
And they end up, to your point, it's like, did they embed their financial products in their partner, or did the partner actually end up getting embedded into the bank ultimately? And we see a lot of that happen, to your point, because the person who has the charter freaking wins at the end of this. I think my problem is if I'm a banker and I'm hanging out in my small town, I don't know what the hell half of these words even mean, and why would I? Right? You know, I mean, I'm probably learning from my high school kid. You know what I mean? They spend a lot more time digitally than I do. And so this playing with folks like you, or playing on the BaaS side and playing with the fintechy crowd, there's all these opportunities where they learn, and then they build the banking guts of how do we actually get it to work. Well, now they're a freaking expert at how they would embed it back into their bank, right? I've seen that happen a number of times, and it's like, if it's an interesting learning experience that maybe BaaS and embedded finance is the next, I don't know, dozen years, and then the banks all end up actually stealing all their clever ideas and embedding them back into the banks, to your point, right? Or maybe we all do.
I would just say they're going to be able to do that as long as they keep the deposit relationships.
Bingo.
BaaS is only as good as the fintech is successful. And we saw that, right? So like prior to the internet age, you were the deposit relationship with all the local community that you were able to convince to bank with you that you served. And then you started buying loans from like the Upgrades and Upstarts and Credit Karmas. And then now Credit Karma is the brand for the consumer, and you're only getting as many deposits as they're able to convince to move money to their business. So if they fail, or if they decide to upgrade 10 years down the road, you have to pivot very, very quickly as a bank. So like my only plea to the banker is make sure you still have enough people who call you home for banking. Like if I met him at a bar and said, "Oh, who do you bank with?" "I bank with this bank." I don't want every consumer to say the Chime.
Yep.
Right? Because under the hood, that bank is successful. But the minute Chime is like, well, then let's just go get our own charter.
Right.
Like that world will happen eventually.
Yep.
SoFi.
Yeah.
On Klarna in Europe, Klarna's over $1 billion deposits. Apple, I'm sure if they wanted to, they could go get a license tomorrow. Maybe that's why Goldman dumped them. I don't know, but I mean, it's that world is coming. So that's my only concern for the community bank that goes the BaaS route. Is it short term? It's great, but like, what's the 20-year horizon for your 100-year-old bank?
Bryce, I'll tell you what, man. Not to disagree with you, it's a vocabulary thing. We look at this like there's BaaS Direct Bank, there's BaaS FinTech, there's BaaS Embedded Finance, and everyone sees these things this way. And you're actually looking at this way, which is still BaaS. It's just BaaS embedded
back into the bank,
but back to the bank, which is like, oh my God, love it. This is how the banks can win.
Well, it's how we thought for until the last 15 years is how we always all thought, right? There wasn't anything else, you know.
But extending the services that a bank can offer to change the way a bank makes money and serves their client, at a higher need. Man, I wish my bank did that.
Yeah, I think what we've just heard and seen for so many years is, back to your community theme, you're doing everything that you can, super relationship driven, right? Offering everything that they offer, and the economics just aren't there, right? And we see so much consolidation, and which leaves us at this place of we all need to merge for scale, right? Because I mean, ultimately, we could argue this. What's the size where you're not community?
Regional's not big enough anymore.
How about this? What town does the CEO of the bank live in? I mean, it just gets, And so I think what we've looked at is how do we go outside of the geography? Almost, I wouldn't call it a different division at the bank, but think that way, right? At a whole nother room off the side of the bank that is not focused on the community and does other services, right? And so I like that theme, not to be, to your point, not to drive our overall strategy, but make me that extra 10%, that extra money, the little spending change that we needed, so we don't end up selling the bank. I like that.
The gap for the most of the banks, when you look at the financial data, is not huge.
Yeah.
And I think there's a growing voice that you hear it from people, and then you start hearing it a little bit from everybody.
Community banks just need a side gig, man. That's really it, right?
But there's a little bit more of a rumble turning into a roar now that why in the hell are we regulating everybody the same way? Yeah. There's not this systemic risk. So when you guys can come into the bank and let's say systemically do this entire program for somebody that doesn't have anything. You can do all of these pieces, right? Am I right on that?
Yep.
Oh yeah, I mean we're launching institutions today that don't even have P2P, but now they have buy now pay later.
I love it. That's
So
amazing.
yeah, there's not a barrier there.
Okay, so you can, and the fact that you had, man, I'm still stuck on that 10% when you're like, golly, that's a big number to have happen that fast.
Yeah.
And to be a money maker for the bank. This is what I've been yearning for in all these conversations over the years and working with the different companies and everything, is that we need to have things that are actually beneficial for the banker, not just stripping things from it.
Well, we hit on it briefly last time I was here, but was it 30 years ago when the banker was, somebody knocked on their door and said, "Hey, do you want your own credit card program?" And they were like, "Oh, finally, like now I can compete with JP Morgan and American Express and offer this to my SMBs and consumers." And I think banks for the most part have been fairly successful cross-selling their credit card programs. They usually have like a 5 to 40% penetration rate there. But when's the last time that happened for a transactional product? I think that was it. So it's been decades since a bank has launched a transactional product that makes them money every time somebody uses it.
When to your point, and over all of those decades, they've launched a ton of digital products that cost them money and aren't part of their
cost centers.
When there's a hell of a lot of people that tried to go down the credit card path that didn't work out too well.
Yeah, I love it. Hey, man, final thoughts. Take a couple minutes.
I got a thought.
This was the coolest conversation, by the way. This was great.
Yeah, come hang out with us. I want to learn more about all the stuff that you can do.
Yeah.
Did you say you had a final thought there?
No, we want your final thoughts, but first I want to come hang out with us.
Yeah.
Well, appreciate it. So let's see. Right now we're splitting out debit card purchases over time. We're going to be launching the ability for you to split out purchases over time before you shop. We're launching that in Q1. So to your point, you're about to go on this, road show with your wife. We'll just allow you to one-click put the $1,000 in your account and then tie all those transactions back to your road trip and turn that into an installment loan. So here's my prediction for next year.
Okay.
Is a year from now, we'll have over 3 million consumer checking accounts attached to this thing. And the debit card activation rate at the FIs that we serve will be about double what the other institutions see. So I just want to put that out in the ether. I did that last time with you guys and everything.
We're not going to win. We're going to win by 20. Yeah. I like it.
I love it. Hey man, you crushed all the predictions from last year. So
yeah,
keep rocking and rolling, man. I gotta tell you, I had a blast last time we all sat down and chatted. This was awesome. You went way, these little tidbits you threw out, but it was really a comprehensive story, I think, for everybody. So,
and we didn't even talk about the Affirm card.
Yeah.
Hit it, man.
Yeah.
Hey, keep going. Tell me about it.
Affirm, as you guys are aware, Affirm is one of the largest buy now pay later providers in the US, launched by ex-PayPal Mafia Group. Very successful company. They're up to 16.5 million monthly active users on their platform, and they're a direct consumer buy now pay later fintech company. So last year on this show, I said, hey, they're about to launch their debit card, look out. And they launched their debit card about a quarter later, and now they're activating 75,000 debit cards every month right now. And their debit card spend, they would be a top 1% bank on their debit card spend in 2 quarters worth. And their average debit card user is about 20 years younger than the average debit card user of a bank. And the most important thing about their debit card is that it's not like your parents' debit card anymore. It's not just something you swipe and then you move on with your day.
He calls them dumb debit cards. Yep.
Yeah. It's like, oh, we're innovative. We have tap to pay. It's like, well, so does everybody else. That's a commodity. But it allows the consumer to decide, do I want to pay now or pay over time? And most people are like, well, how many people would actually do that? Well, 51% of their swipes are turned into loans. Like
Wow.
that's something that people in the payment world, you kind of get it right away. It's like it's a come to Jesus moment when you realize like that is not it's not a debit card anymore.
Yeah, it's instant access to credit at point of sale.
It's like the thing that you
By
use
choice.
to pay off a line of credit, like a credit card, except it's backwards.
Built into your checking account now.
Real, I love it.
I got a great story for you. So Bryce, I was telling him when I was a kid, you'd go to the grocery store and, you know, during the summer, I could go and get anything I wanted and I'd put it on my grandma's account and they would bill them at the end of the month. And all this was before digital, right? But this concept is kind of coming back
It's a concept
life
of just
in
an
a
account.
digital way now, and except really we can do it at the end of the month, or you can just put this on your bill, which is basically buy now, pay later, right?
There's just an account.
It's a cool thing to watch.
I love it.
Sorry,
Yeah, it's amazing to see just the automation aspect where like I got my Affirm debit card just because I wanted to check it out. I was able to set up my account in about 90 seconds. The interesting thing about their card right now is they haven't launched their own checking account under the hood like Experian did when they launched their debit card. So what they're doing is they're writing a plaid rail attached to their card that just ACHs money out of your deposit relationship. So what they're doing is they're just front running your bank and saying, well, just use our debit card because it has better features than what your bank is offering, but you can still bank there for now.
That's it. That you see why when you run everything down on what's out there and what's being done, the BaaS side of the world is attractive because if I can't beat them, join them. My first principle though is I'm with you. Let's go build cool shit and beat them. Of course. The problem is, well, I think when we look at so many banks across the country, it's a way long distance to get to where you need to be. And I mean, it's all coming 1,000 miles an hour. But what you said today was one of the I don't hear stuff like this every day, man. This was you got my attention. This was very, very good. So thanks for coming on.
Yeah, my response would be why not do both?
Good call. I agree.
Like be the BaaS provider so you can make the extra income, but also be relevant to the next generation of people in your community.
You got it.
Yeah, I think
put $1 on red and $1 on black because you're not trying to win, you're just trying to not lose. Yeah.
and showing banks a way that they can employ modern technology and cool things and features. And why I kind of went into that story a minute ago is that human nature still wants to do these things.
You bet.
It's like it's new. And like you said, hey, I'm 40 and I still want instant gratification, right? Man, we all still have these same instincts that work the same way. And it's like to your point earlier, millions of dollars to build these things. Well, now you're actually building them for the banker to implement right directly to his customer and extend all these cool things that they've had to go outside to go get these things or get them at point of sale instead of through you.
You bet. Really good. Dude, thanks for coming out. Like, had an absolute blast. Really, really good stuff. Should we do it again next year?
I was thinking next week.
Yeah. I mean, come drink a beer before then. Sure.
Yeah.
Sounds good, guys. Yeah, happy to come on anytime. It's always a pleasure.
No, we appreciate you, man. Thanks for all you're doing. We'll catch you next time.
See you, buddy.
All right. Cheers.